Persistent Systems is the interesting one. They came out with the numbers. The stock was up 2% when we first started the show. Anand Deshpande, CEO and MD, joins us right now on the show from Pune to speak about the numbers. Good having you, Anand. Thanks so much for joining in. Sum up this quarter for us.
The overall quarterly sequential growth was 3.9%. And the reason for this growth, the biggest contributor was the IP revenue, which grew about 14.4%. The services revenue grew by 1.6%. Now, if you look at the services revenue and split that in terms of volume growth and billing rate, the volume growth was actually a dip of 1.1%, meaning it really shrunk by 1.1%, and the billing rate grew by 2.7% to create a 1.6% growth in the sequential services business.
Mr. Deshpande, hi, morning. Despite the forex headwinds and higher business investments, you've managed to sequentially improve your margins as well. Is it a combination of the higher IP business and uptick in realization, or there's more to it?
Right. So this quarter, as compared to previous quarter, forex was pretty much flat. So it was not really a big factor in the whole scheme of things. But overall, our growth was driven by a very large growth on the IP revenue. And because the growth on IP revenue was 14+%, that contributed to a bigger growth on the margins. In terms of a quarter-on-quarter number, we actually invested quite significantly with a lower utilization number because we are seeing a lot of activity in the markets that we play in. So Persistent has been focused on working with software product companies and helping companies build products, and we are seeing a lot of activity in these next generation digital transformation projects that we see from enterprises and customers who are interested in building these next generation enterprise solutions using SMAC technology. And our investments in these areas have been very spot on for the last several years, and we have been training a large number of people to get ready for the pipeline that we see for the next few quarters. So overall, we see a very active market, lots of activity, and we are seeing good traction in some of the newer technology projects that we are working on.
Tell us about your key deal wins and what's the ramp-up schedule looking like, especially with the HPC renewals. What kind of pickup can we expect there?
Right. So, as you mentioned already, the IP-led revenue constituted 14.5%. This is a 20% year-on-year growth on the IP-led revenue. A lot of it is being driven by the projects that you pointed out around HP, client automation projects that we have, and the IP that we own. The deal renewal pipeline has been pretty good. We have launched 2 versions of the product, and we have been launching a new version of the product every quarter in some sense. And overall, we see there are a lot of opportunities to upgrade to the new versions with our customers, and we see a very active pipeline both in our cloud, which is our cloud automation disaster recovery product, and also the client automation product. So we are very optimistic about what we see on the IP revenues, both in terms of the existing IP revenues and also in terms of the acquisitions of IP that we have in the pipeline. Now, in terms of the services business, a lot of it is being driven by platform growths, new platforms that we are investing in, and these are generating some stellar accounts. Now, we don't want to name accounts at the moment, but these are very large companies for whom we are doing very specific digital transformation projects at the moment. And our hope is that we will be able to convert these projects into long-term relationships. That's what we are counting on, and that's where we think the future of Persistent is going to be coming from.
Right. Mr. Deshpande, your 2 key markets, which US and Europe, contribute to 90% of your revenues. Is traction showing signs of higher pickup now, or the trajectory still looks linear?
Right. So predominantly our business is North America or US centric. Most of our business traditionally has been working with software product companies, and there is a dominance of US product companies in the world today. And that's the reason why our software business tends to be very North America or US centric. Overall in that market, we are seeing a lot of activity and growth. So that market will continue to be strong. And I wouldn't be entirely surprised if that percentage even goes further along in terms of the year-on-year % for the US market. That said, we have been enhancing our investments in Europe right now. We have added a few more people both in Germany and in France and also in the UK. and we hope to add more business in Europe. But as a percentage of our business, Europe continues to be a small percentage as compared to the US market.
And your dollar revenue growth in FY14 has been 15%. With your optimism on key client wins and healthy traction in key markets, do you think that you can deliver better growth in FY15?
Nice. So, okay, let me say the following. Okay, we are not giving any specific guidance, but we do expect that our FY15 number will be better, much better than the FY14 number, for sure. That's very clear. The pipeline is showing that, and we do see overall better market conditions both for IP and for this platform business. So we expect FY15 to be definitely much better than FY14 in terms of the dollar revenue growth that we are looking at. In terms of the rupee revenue, the growth looks much better because of the forex numbers. So it's hard to say what, when you look at percentages, it to some extent depend on what happened on the rupee dollar conversion. In terms of margins, we think we can protect the margins that we have. We have levers that help us improve the margins, but this is going to be an interesting investment year for us, and we are not going to go very crazy trying to increase the margins next year. But we do expect that we can maintain the profit before tax and profit after tax margins that we have had this year into the next couple of years for sure.